Hello and welcome to the Wednesday check-in brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is February 18th, 2026, and we're looking at Bitcoin on the weekly here to start. One of the big things that I wanted to talk about today in regards to Bitcoin is that on lower term timeframes relative to the weekly, it's beginning to set up for the next move. And we're going to define the criteria for what would need to be seen for the conditions to be met for the next move on those lower term timeframes. But I wanted to zoom out to the weekly to kind of show you the lay of the land. As it stands right now, with where the Bollinger Bands are set up, we have the lower second standard deviation just below last week's low at $65,000, coming into the mid $63,000 area at 63.6. If we did see the lower second standard deviation get tested again, that's likely going to be closer to the 63 to 63.5 region. And that would be if we were to see a sharp spike down into it, because the weekly candle is still open. That would be, that would be an area to look for as the bands do slightly adjust while the weekly candle is open. They don't adjust much, but they do get a little bit more refined as price gets closer to them or past them. In this case, that lower second would be somewhere around 63 to 63.5. It definitely wouldn't be 63.6. So we'll follow up with this on Wednesday. And I wanted to note where the next big area was. I've talked about below $60,000, there's 58. And that's also on the weekly an area of interest for where the 200 period exponential moving average is, right? Excuse me. If that is, 200 simple moving average, we're below the exponential, which is at around $68,000. The 200 period simple moving average, rather, is at right around 58. So right around this low, and this was a higher low swing from this range that Bitcoin is currently trading in. And of course, that area of interest for me is at that 58.8 to 60. So be aware that Bitcoin could very easily swing the low into the 200 period simple moving average on the weekly. And if it doesn't provide for a bounce, and we did see extremes in volatility to the downside, the next area of interest below there would be essentially a sweep of these range lows and this prior consolidation range highs, which is the $49,000 to $50,000 area. I would put it more at like the 48 to 50 area, right around the lower third standard deviation by the 377 period exponential moving average. This, of course, is also where we saw the high post ETF launch, or prior to the ETF launch, I should say, because we saw the high come in at 49 and then there was a dump off to 38.5, which is a major monthly level from the prior cycle. So we saw 50K essentially hit, 49K in this case, and then a move back down to grab liquidity at the monthly at 38.5, which was the prior cycle monthly area of interest. And in fact, I wanted to kind of illustrate how beautifully, even at the time, Bitcoin was playing when looking at 38.5 on this particular low. That was this guy right here. So this doji right here on the monthly, where we were starting to kick off expansion. And you can see that it was right on this low close open area. Now, the closing low didn't actually come in, but it was the close open of the swing low that was down at 32,900, almost 33,000. So understand that's a big area on the weekly. And really, I'm only looking for those conditions to be met should we lose, I would even say 48 to 50, and the range kind of being 48 to 55. Why 55? Because we have closes over here at $55,000 and $56,000, right? Essentially 55 here, essentially being this low at 54.8. Some charts it will be 55 to $56,000 or so. So that would be an area of interest, around the 200 period simple moving average at 58 to 60. I'd be looking anywhere below there around the 55 region down to around 48 to 50. Now, why am I bringing this up on a Wednesday check-in? Typically, I don't take a look at the macro in this way. On the Wednesday check-ins, I usually save that for Mondays and Fridays with the macro Mondays and the Friday recap. But the main reason that I'm looking at this is because on the 12-hour, we see that we have completed the expansion to compression. So the next move is loading for Bitcoin. Why am I only talking about the downside? Well, because right now we're fairly close to testing $65,000. And we do need to be aware that if we break and start closing below the lower second standard deviation and fulfill the criteria of closing below $65,000, that would initiate expansion back to test the lows here. Now, on the other side of that, if we do see Bitcoin trading to the top side of this compression, so expansion to compression, look to the upper second standard deviation on the 12-hour, where we also see the 55 period exponential moving average, right? Your warnings that we're going to test this high side structure around $71,000 would be any move above right around 70, like upper 69K region to 70. If we see that, we're probably going to come test the upper second standard deviation. Any closes above here, if we haven't already seen it, would raise those targets to this current range high area at 72.2. If we didn't see that already tested, it'd be very highly likely that we'd see a test up to the 55 period exponential moving average and the range high somewhere around 72 to 72.2. And if we saw any moves above there, I'd be looking for, anywhere between 74 and 75 being the first area of interest, and then probably 75 up to 80 for a retest of the weeklies that broke down up above that led to this move down here. And we can see that the 100 period exponential moving average, this is an 8 hours, so let's go to the 12 hours. Sorry, it's the same essential look. My bad. But it's the EMAs and MAs shift. So in this case, anywhere above 71, we're likely going to be testing up to 72 to 72.2. Close above there would initiate expansion to somewhere around, 74 to 75K. And we see that we have a 50 simple right on top of a 55 EMA up there. Anywhere above there, I'd be looking between 75 and 80, and that's where the 100 period exponential moving average is on the 12-hour. Why am I pointing out the 12-hour? Because it's a big expansion to compression now. If it breaks down from the lower second, which is right now at 65.5, and then completes an expansive move below with closes below 65, we're looking for a test somewhere around, that 63 to 63.5. If that drops, probably going to go and test the lows on a close somewhere around the 62 region here by the lows. And this bear candle low around 62 to that 63 right there. And then potentially the actual low itself, 58 to 60. And then above 71, look for a test to 72.2. Anywhere above there, look up 74 to 75. And then above there, we can start entertaining moves to retest somewhere around the 78 to 80. And this is where on the 12-hour that's going to come into play. We've got it right around the 78 region to the 100 period moving average. And that's an exponential moving average, which is, in this case, just below the swing low here of the prior range that was holding things up at 80. So let me say that again. Start seeing closes below 65. We're going to test probably the low 60s. Anywhere below like 62.5, I really would be looking for a test of the lows 58 to 60, maybe even a sweep to that 58. And then to the upside above 71, look for a range high test around 72.2. Above there, 74 to 75. Above there, 78 to 80. And that is kind of the lay of the land here. You can see how that's shaping up with the daily also moving from from expansion into compression. So starting to get ready for the next expansive move here. And we could see it move within this compression on the daily and not do a whole lot. See, the upper second standard deviation on the daily is up at 78, 55 is right at 80, right? To the downside, we see right at 62. That's right around where the close open and the swing low of the bearish candle on the 12-hour is. That's a daily lower second. Anywhere below there, we're looking at the lower third coming into around $58,000. Potential sweep of the low, 58 to 60. If we start seeing closes below 62, though, that would initiate expansion to the actual low here at 60. And that's where we're looking for, if we get closes below there, possible continuation to 55K, so on and so forth, down to 48 to 50. Just be aware of the conditions that need to be met. And in this case, it would be on closes. We can test any of these areas without closing and initiating any kind of expansion on the daily, but very highly likely going to see the next expansion begin on this 12-hour period here. Be aware that it can expand up, hit resistance, and then utilize that volatility and come right back down. Same for the downside, back to the upside. So that'd be expansion to mean reversion. And in this case, it's loading. We'll see what happens, right? I'll, of course, follow up with this on Friday for Bitcoin. Let's go ahead and take a look at commodities. They got a nice little move up. Gold moved up to above $5,000. Still a downtrend. What do we need to see break? In this case, $5,053. That would break this current downtrend, and then we need to see a close above this high at 51.19 to go and test the upper second right here at the 2618, right around 51.31, and above there I'd be looking 52 to an expansion to the upside, like looking at 54 to 56 pretty quickly by the highs there. To the downside, anywhere below this most recent low, which is coming in at 48.41. I would need to see closes below the lower second and that lower low there at that, right around 4,800 area to go test this close open down here at 47.75, 76 area. And then potential expansion down to the 46.50 to 47 low side structure here that was tested most recently. If that did break down, we're probably looking to the 4,500 area, potentially more, down into the lower area here around the 4,400, 4,300 area. When looking at silver, same kind of deal. Pretty easy. Need to see closes above the upper second at 86.40 to go and test around 90 and then 92.20 there. Expansion to 95 to $100,000, $100, not 100,000, but $100. Somewhere up here, low side of the highs here. Anywhere above there, we're looking 100 and probably pretty quickly the highs again there by 120. Any breakdown of the 200 periods here between the EMA and the SMA by the lower third. If it breaks down below 70, look for a move down into the actual moving averages here by the simple moving average. Anywhere through there, we're probably looking, upper 50s to $60. So anywhere below 70, again, that's still going to be the criteria to go and test somewhere around the, 65 to $68. Anywhere below there, we're looking upper 50s to 60 by the 377. Oil got a nice bump up. Of course, a little bit news driven. I think a lot being made of something that we knew was going to be happening there in the Iranian region with Russian assets and Chinese assets now performing exercises with Iran. These were pre-scheduled. They've been going on since 2019. Yes, it coincides with all the saber rattling. Yes, it coincides with, putting concrete over some of the nuclear infrastructure and then burying it in the ground with soil. it's all, kind of narrative driven. It is putting a little bit of a squeeze on the oil flowing out of Iran. Understand that that's global, right? It affects global markets. So you're seeing oil move up kind of globally. In the past day, nice big candle up for a move to $65. Now, we would need to see the high side structure break, specifically Wednesday's high around 65.43 to 65.50 to go test the actual highs around 66.5 to that high that is coming in at 66, well, 66.5, 66.48. Anywhere above there, probably pretty quickly going to see 68 to $70 per barrel and more. Anywhere above there, we're likely starting to hit this overhead resistance area between the 74.40 and 78.40 region. Now, this is an area where you can just kind of call it 75 to $80. But if we do see the low dropped here at just below 62 at 61.87, look for a test to $61, potentially 60 again. Anywhere below the 60 region, this is going to fall back to 55 on expansion over a period of time, in my opinion. We did also get that move in natural gas as well off of the lows. So we did see that sweep, and this was a sweep that I talked a little bit about into the upper $2 region and the 290 region. No breakdown below 290 though. If we did see that, that would be expansion further down. Anywhere back above 317, 320, we can start looking for a gap fill between that 330 to 340 region, with the possibility that if we're going to get more, we're probably going to go for that high at the 365 region, right into overhead resistance. If it did try to push up further into that 390 to $4 region, I do think that would spell rejection. That is going to be a little bit more contingent on weather in the United States, in my personal opinion, right now for natural gas futures. When looking at traditional markets, Dow did come down. It's been choppy. It's in higher low structure. I'd like to see a close above 49,740. Now, I did mention that watch out for a swing of the lows. It's all about the close and the break for NASDAQ and SPY. And to look to Dow, if Dow starts to break down further, we're likely going to see NASDAQ and SPY roll. But Dow held up. And that's kind of what I wanted to see for the bulls in this case. Still not out of the woods for NASDAQ and SPY. In this case, we did see that move to 49.9. Anywhere above there, we're probably looking 50K to right around 52 to 53, and then possibly the highs at 50,500. We essentially hit our main targets. I was looking for 50,500 anyway, but above there, we can start entertaining trips to 56 to 57 by the upper third on expansion, likely targeting 58 to 60. So that's going to be something to watch. Now, if we do see this low dropped, and that low is going to be at 49,000, look for things to start breaking down back to the lows and potentially lower for NASDAQ and SPY as well. And for Dow, it can still safely swing 48,830 here, but it would need to get a nice bounce from there. NASDAQ, nice bounce off of our zone at the lows here. We did sweep the 24.4 region, 24.5 region by the lower second, no close below. If we did see this continue its downtrend, meaning that if it fails to get above 25,382 or 25.4 here and push back to the high side of the range, just beware of lower highs yet again, right? This low is set now, but I still would have wanted to see a close above 25K, and we did not see a close above 25K. So if it does drop this low, I'd be looking right back to the low side structure here around 24 23,800 to 23,800 to 24K, at least initially. And this is looking like it needs to either set up for a long form consolidation or rollover, to be quite honest. That's what it's shaping up to look like. Same thing for SPY here. Did not close above the swing high, this bear candle doji here. And in this case, need to see a close above 686. We got the close at 686.19, and this was 686.28. Very close. Nice mean reversion off the lower second, sweep of the lows for the range here. Conditions would be, hold the low 675 and then take out the last, lower high swing. In this case, lower high swing with a slightly lower low close. And that's going to be all the way back at between 695 and the highs at 697, 698. Above there, looking for 700 to potentially 705. Below the lows here, where the 100 period EMA is coming in, we'd be getting expansion and probably see 670 pretty quick, right around this open. This close. The open was up here at 677. Close was down here at 669 or 670, if you like. And this is where things get hairy, because the 200 period exponential and 200 SMA bracketing right around 647, right over here, right around the lows for the 200 period EMA or exponential around 650. Likely we'd be getting expansion into some of those areas, one step at a time. Be looking like 650 to 655, and that would be pretty on point, pretty on par for a rollover correction. If it got much worse than that, I think it would be a fairly quick correction across these markets. But realistically, I'm still going to watch Dow because of the rotation. If we see Dow, getting below 49.1, we're probably already seeing NASDAQ and SPY breaking through the lows and going for some of those key areas. And then it's just watch the bounces and recoveries on closes when it comes to the dailies, the 12 hours, and some of those lower term time frames. Because the weeklies, as I'm going to point out on Friday, are all throwing like massive bearish divergences. So, not the best look. Definitely looks like it wants to roll, but that doesn't mean it's going to. But that's all I got for you today. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, go ahead and like and share this out there if you did find this information helpful. And I'll be back with you and some of your requests on Friday as well. The video will be a little bit longer, and I'll take a look at some of the requests as well. I did actually put them in my notes, so I will remember to do so. And take care of yourself. With all that being said, again, Landy out this time. Take care.